Okay, I hope the online participants can hear us, right?
Yes, sir.
Okay, well, thank you very much. Right. So let's try to continue the lecture, and we are going to continue. Although this is digital business strategy, we are going to continue the last lecture and finish it first of all, and then let's start our paper discussion of the DBS digital business strategy. And let's discuss again some related. And today will be the last session for the DBS, and all other sessions will be on research method. Get out. Because we have finished the DBS. Even DBS, I take what 40 minutes to explain. Taking a past paper again, what is being tested and what things could be tested as well. Right. Okay. So now let's come to the next important table in SPSS that you need to look into. So this is a continuation from the research method lecture. So because now this will be in a different recording, of course, but again. So here you will see that we are going to discuss about ANOVA table. The next table here is about the ANOVA table. And then you're waiting for it. Please do. ANOVA. This is the ANOVA table. The ANOVA table is basically, again, a lot of information is there. Now I think I clarified what the model summary table, what you have to look at. The model summary table, you have to look at only what? The R statement. It shows the degree of explanatory power of the independent variables over the what? Dependent variable. Higher the better. Higher the better of the independent variable. Now let's go to the second table. Second table is the ANOVA table. In the ANOVA table, you have to look only at the last two columns. Right? We have to look at only the last two columns. What are the two last columns? The F test and the significance level. The F test and the significance level. The F test and its significance level is given here. What does it indicate? It indicates whether the overall equation, whether the overall model is valid or not. What? It shows whether the overall model is valid or not. So shall we take down small now? You can say, please take down the ANOVA table. The ANOVA table. Here, column down. The ANOVA table. And put a small column. Put a small column. The ANOVA table and put a small column. The last two columns of this table. The last two columns of this table indicates the capital F value, capital, right? We need capital F value and its significance. Capital F value and its significance. Full stop. The capital F test indicates whether the overall model within brackets equation is valid or not. In case if the sig value of the capital F test the capital F test, is below 0.05, is below 0.05, comma, it is concluded that the overall model is valid. Note that but one thing the card, right? You have to just listen to that. And for the benefit of all. Now we have discussed the model summary table. Right? There we discussed the R squared value. It shows what? The explanatory power of the independent variable or the dependent variable. Now we shall come to the second table, which is the ANOVA table. The ANOVA table, we have to look at only the last two columns. In the last two columns, what's indicated is the F test. Last two columns we get F test, capital F test. Capital capital F. F test. F test and its significance. So in the last two columns, that's what is indicated. What this test indicates is whether the overall model, whether the equation is valid or not. Yeah, no problem. So if the significance level of the F test indicated here is less than 0.05, I told what? What's the conclusion? The model is valid. Why? Because it's significance level. If it is less than 0.05, that means what? More than 0.95, that is more than 95% confidence where what? The model is valid. That's why we always see the significance less than 0.05. Right? So in this case, you can see now, what can you say? Is the overall model valid? But what the model is the entire equation, the 6 independent variables and the dependent variable. That's called a model. Whether it's valid or not on an overall basis. On an overall basis, whether it's valid or not. Now, by looking at this table, can you tell me whether it's valid or not? What's the sig value? It's not even less than 0.05, it's less than even 0.01. So you could say we have 99% confidence what the model is valid. So please continue what you have written. Since the given example, the sig value is less than 0.05. The sig value is less than 0.05. It is concluded that the overall model is valid. The overall model is valid. So the equation as a whole is valid. That's what it says using the F test. Overall model is valid. Are you happy? Indeed, you have to be very happy to see this. If it is not valid, then your equation has problem. But here it's valid. Then now let's come to the last table, which is the most important table. The last table gives all the answers for your question. What is the intercept? What's the intercept value? That alpha value. Then what are the beta values? The slopes are given here. It's given. So here you can see that's called the coefficient table. In this coefficient table, you can very well see the constant is given. The constant is the intercept. In SPSS language, the constant is the intercept. What's the value? 0.377. Right, 0.377 is the intercept. Then the slopes are given for all 6 variables. What are the slopes? 0.098 minus 0.030. Then emotional value minus 0.049. Then conditional value H plus 0.202. Likewise, it's Q. So these are the slopes. And also, most importantly, it gives the individual significance level. Now, earlier I told as a whole whether the equation is significant. What equation? So, Mukadami says the equation model gano equation gano what equation? Let me show you. This equation. This is the equation I was talking. This is called the model of research. Purchasing tension equals alpha plus beta 1 OL, beta 2, these are the slopes of the equation. So this overall equation, whether it's valid or not, is indicated by what? Annotated. Annotated. The last 2 columns of the annotated. And I was telling you that seed value should be less than what? 0.05. And indeed, it indicated it was even 0.0000 something very small. So in that case, you have your conclusion. It is less. So this model or this equation is valid on an overall. But although the overall model is valid, the individual variables might not be significant. The individual variables might not be significant predictors. How to see that? You are going to the third table, which is called the coefficient table. So that's what we have gone here. So in this table, you can see the intercept is 0.377, the alpha length and the beta values are given. Those are the two. Now you can see the individual significances are here. What can you say? Is opinion leadership the first variable significance predictor? Is it significant? No, it's above 0.05. It's in fact 0.122, that means 12.2%. It has to be less than 0.05, that means 5%. Then only you can claim that there's 95% certainty or confidence, or certainty confidence that this is a valid predictor. How about the next one? Functional value. Can it predict significantly the purchase intention of the music app? No. In fact, it's 0.633. Again, not a predictor at all. The third one, emotional value. Does it have something with the purchase intention? No, again, because it's 0.371. How about the next one? Conditional value is a significant predictor. Is it positive? Yes. So if you increase the conditional value, what will happen on the purchase intention? It will increase. It has a positive impact and we can claim it. But the earlier 3 variables did not have any impact. The next one. How about epistemic value? Does it have an impact, a significant impact on the purchase intention of the premium music act? Yes or no? Yes. It's also less than 0.05. So in that case, you will conclude, yes, it's also a significant value. So it's positivity. The social value. Is it a significant predictor? Yes or no? Yes. It is a significant predictor. So that's how your conclusion. So if you have to provide recommendations to the music app developers, if you have to provide recommendations to the music app developers, what kind of things you will take? Tell only on things that are significant. You can say increase what? The conditional value. Increase the epistemic value and increase the social value to have a greater purchase intention of the customer. So those are the recommendations finally that you will give. Only based on what? Significant print. That's one thing you have to understand. Only on significant. But now what we can do is, we shall write this as an equation. Information then equation is clear. Shall we write? Why not? So let's write the equation. I'll write the equation. What's the equation? Now all about the over. What's the equation? Y equals purchase intention. Let's use the Google. Purchase intention equals. Now what's the alpha? What's the alpha? That's 56. Is it this one? 0.377. Then plus. Plus or minus, it's plus. 0.098, isn't it? Opinion leadership. Then what? Is it a plus or minus? It's minus. The minus sign. Look at the coefficient table. I'm putting the slopes, beta values. Minus, what's that? 0.030. What's that? FP function. Since there's no space, I'm going to write it over here, the next one. Then what's the next one? EV, emotional value. Again, it's a minus. Correct? 0.049. Emotional value. Plus or minus. Then after that, it's a plus. 202. Am I correct? Yes, it's CV. CV. Then you have EPV, 0.237. It's a plus. Then finally also it's a plus. Social value 0.395. After that, we have. So this is your model equation. This is your model equation. You are predicting using independent variables, the dependent variable. Purchasing. How can we interpret this one? When all of the independent variables are zero, still you have purchasing intention. The 1 to 5 Likert scale is 0.377. Still you have purchasing intention. Would be, I think, maybe some people might be really they wish to listen to this. When all of the independent variables are there. So that's the intercept. How can you interpret this one? For instance, SV is in. How can you interpret that SV 0.395? Now remember how we have measured these variables in 1 to 5 Likert scale. right? So what it means is this: if you increase one Likert scale in social value, if you increase the social value by one Likert scale, then the purchase intention goes up by what? How much? 0.395. If you increase by 1 unit, what will be the impact on the dependent? It's 0.395. It will increase by 0.395. It's possible. How can you interpret this one? Which is the weight value? For emotional value. If you increase one Likert scale in the emotional value, right? One Likert scale. What will happen to your purchasing intention? It will go down by 0.049. Right amount. 0.049. So it goes why? It has a negative relation. How can you interpret this one? Functional value. If you increase the functional value by one Likert scale, then what happens to your purchase intention? Your purchase intention goes down because it's minus by 0.030 Likert. Because all these are measured in Likert scale. Right? So you have to keep that in mind. Okay, so that's what you have to understand. So let me take another example which is totally unrelated and give you some context on what this one Likert statement is. So let's say salary, your salary. Your salary. Let's take this one as an example. Right? What does this mean? Let's say, for an example, you created by doing a regression analysis that your salary is equals to 100,000 for, let's say, all the employees in your company. You did a regression, putting them in your category, and you took their experience levels as well as you took their qualification. Some better qualification next. What does this mean? Even if you have zero experience, even if you have no qualifications, still you receive how much? 100,000. That's what it means, intercept. Intercept means when x is 0, when any of the predictors are 0, still what you receive? It's 100,000. Now let's try to interpret this 5,000. What does it mean? What does it mean? When experience goes up by 1 year, when experience goes up, let's say we measure by years, experience goes up by 1 year, what happens to your salary? Your salary increased by 5,000. 1 unit, what will happen to your salary? Then let's say it's a particular qualification. If your qualification goes up by one qualification on a particular qualification, let's say that's related to your area, then your salary goes up by what? 10,000. Now do you understand what's this? Not this Likert scale might not be quite palatable. So I took an example that really impacts our current situation, salaries. So every time what you have to see is the slope means if you increase by 1 unit, what will happen to the dependent? Right. Okay. And let's take another. So absenteeism. Also, you look at another variable which is absenteeism. How many days you got absent? So what does it mean? If you're absent 1 day, your salary goes up? No, goes down, usually by 5,000. That's negative sign. It goes down. That's why it can be a plus sign as well as a negative sign. So this is what the slope means. This is the intercept. These slopes could be positive, but it could be otherwise. So simply that's what we mean by the slopes and it's. But however, when you are going to do recommendations, right, look at the significance of the individual variables and give recommendations accordingly. Again, let's go to our example. Now, example. Okay, I'm going to share this. So, it's interesting, no? Different computers platform. Okay. Now, see, by looking at this coefficient table, now if you are to recommend to increase the purchase intention, now you have to give a recommendation to the developers of the music app to increase the purchase intention of their customers. What are the recommendations that you are going to give? Number one, increase what? The conditional value. Some conditions. Then increase the epistemic value, whatever that means. Then increase the social value. So if you are going to listen to that music in social situations, you will get some prestige, social value. So increase that. Promote that. Ask some celebrities to use your music app and create social value. Celebrities. You can ask, I don't know, maybe Sandra Crash or something. Listen to that music. Someone else. Right. Likewise, you can make your recommendation. Right. Now let's come to the question paper. What question paper is it? The question paper we were discussing. And now you tell me, by looking at the regression analysis, and whether you can answer the questions that we have. Right. So let's go back to the question paper that we were discussing on research methodology. Okay, this is the question paper. Okay, again to remind you, there are two independent variables. What are the two independent variables? Audit firm size. How it's being measured? One, big firm, no big firm. Then auditor independence, that also taken into consideration. Then earnings management, taken by some other variable. Right. Now the question is this. Right. How the regression results are given? Can you see? Now concentrate on which regression result. Now remember, when regression was given, right? In SPSS, it was given as separate tables. But in a research article, it's not given in that way. It's given in a table like this. Here you will see that there are two regressions. Just ignore the panel regression for the time and concentrate on the OLS food regression. That's what we are discussing now. So only leads to as friction. Linear. Now you can see here, in this, you have independent variables. And what's the first one? What's the first one? What's the first one? The constant. The constant. What's that in our language? That's the SPSS language. That's not the theta. That's what? The intersection. The intercept. The intercept is that constant. Then we have all the independent variables that you have considered. What are the independent variables? Auditor size, auditor's independence, audit committee, independence, net company size, leverage, CFO, like us all are defined up there in the table. I can remember, so I'm there. And then we have the coefficients. Can you see the coefficients? Now, in the SPSS regression analysis, these coefficients are given in which table? First table, second table, or third table? The last table that we discussed. But here it's given in all one table. And you can see the coefficients are given and the t values are also given. And you can see here, no significant values are given. Can you see the significant values here? The sig values are given? No. Instead, in research articles that you are going through these days, hopefully, they indicate the significance level by asterisks. If a variable is significant, they put asterisks. Now, for an example, here there are several variables, but only few variables are significant. What are significant variables? You can see here. See how that is defined. Here, if you have one asterisk, that means less than 10% significant, 90% conviction. Here, two asterisks, less than 5% significant, that means 95% conviction. If you have three asterisks, that means less than 1% significant, that is 99%. Okay. So, in your exam, probably a table will occur like this, where significance levels are indicated how? By way of what? Sig levels දෙන්නේ සාමාන්‍යයෙන් දෙන්නේ ඔයාලා දැන් ඔයාලා බලන්න papers වල මේව තමයි දීලා තියෙන්නේ. That's the convention. SPSS gives the significant levels, but in real research papers, they provide that part using asterisks. So by that knowledge, now tell me, what are the significant variables? Out of all these independent and controlled variables, how many variables are there? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. There are 11 altogether variables, independent and controlled. Don't worry about what's controlled variables. There are 11 variables. Out of 11 variables, what are significant? How about C size? Yes, that's the company size. That's significant. How about the next one? Leverage stands for it's leverage. Then what? CFO? That's again cash flow from operations. That's significant. And MTB, that's a market book value. That's significant. Then ROA, return on assets. It's significant. Some are positive and some are negative. On what? So the dependent variable is what? Should have been given. Here, it's as we told in that conceptual diagram, what was the dependent variable? Earnings. How these impact the earnings? It was given there. Right. And also below this table, as a part of this table, they also given the R square. Can you see that? What's the R square for the oil distribution? 0.627. Is it good? Yes. That means 62.7% of the variation of what? Of what? Earnings management is explained by these 11. That's really good. Better if it had been 4.7. That means 70%, but it's 62.7%. Then what does it say about the probability of F test? The ANOVA table I told you, the F test value is given as well as here the F test value is not given, but the significant level is given. What do you think about this? Is the overall model valid? Yes or no? Yes. Because why? The ANOVA table I told you, the last two columns shows the F test, and if the significance level of that F test is less than 0.05, we say the overall model is valid. In this case, if the overall model is valid, yes. The probability, the sequence is good. Expect this kind of a table at the exam. Now I gave you the basic explanations. Now try to answer the questions that are asked me. We come to the questions. Probably you'll be getting a similar question at the exam. Who knows? Right. Now the next question is question number 3. We answered question number 2 up to question number 2. Right. What was the question? First, we develop a hypothesis. What was the second question? What was the second question? Second question to describe the descriptive statistic of audit firm size, which we did. So we saw that 88% is of the sample is being audited by Big Four. Presence of an audit committee, all the sample firms had an audit committee. That was our explanation for that. Then briefly explain what do you understand by the R squared value. Of how much? Yeah, exactly. Okay, 62% of the earnings management dependent variable is explained by the selected 11 what? 11 independent and control variables. That means what? There is about how much? 38%, almost 38% variation explained of the earnings management variable by other variables that are not considered in this model. Our variable will come explained. To write that, you get 4 marks. Right. So you get 4 marks, right? Then comment on the overall model validity. Is the overall model valid? Yes. How to check that? See the 6th level of test. Was it given? Yes, indeed. You can see here. Probability of the F test is given 0.0000. So is the overall model valid? Yes. That's the model valid, which is given in a regression result at the ANOVA table. Here is given only the sig value. Sig value is given, which is called the probability of the sig value, p value, and probability value all are the same. So you can even take down a small note, right? So you can say sig value equals probability value equals simple p value. Sig value equals probability. Probability equals p value. P should be always simple. P value. P small dash value are the same. And always you expect what? This value will be less than 0.05. If it's less than 0.05, you will say if it is in the model, the model is significant. If it is for the each variable, you will say the variables are significant predicted. Right? Always the same rule. Significance versus confidence. If you are less than this value 0.05, that means you have more than 95% confidence. I hope my good students will write this at the exam. Go ahead. That's very, very important. Then comes the last question. Now this one you have to use your brain power to answer this as well. Briefly explain what recommendations the researcher could suggest in order to decrease earnings management based on the results obtained in the OLS regression analysis. Now, if you want to reduce earnings management, what kind of recommendations you could give? So I told you always you have to give recommendations based on what? the significant predictor. So in that case, now look at this again the result. What can I say? Now, if you want to, now here the dependent variable is of this regression is what? Earnings management. It's not a good thing. Managing earnings is manipulating. Not good. We can inflate earnings by using different methods, right? Legal and not so legal methods are there. And that's a different story. Maybe that's been discussed by in your earlier study. And I think maybe was the teach you or maybe introducer, professor, or not. I think he will be teaching that to you how to manage earnings legally and not so legally. Okay. Now, by looking at this, tell me, if you want to reduce earnings management, what kind of things do you do? By looking at this. Now, the dependent variable, now these are all, let's say, these are all independent variables. What you should do? Take only the significant ones and take which has a negative coefficient. Why? Negative coefficient means when this variable goes up, earnings management goes down. So we are going to give recommendations based on what? To reduce earnings management. So in that case, you have to select, now these are the four variables. Suppose this has T size, company size. That has a negative relationship. So you can highlight that. And then how about the leverage? Would you propose to increase the leverage? No, because it has a positive relationship. When leverage is going up, when the liability situation is going up, the companies tend to do what? Manager. So don't tell anything about that. But how about the CFO, cash flow from operations? What kind of relationship is there? Again, the negative relationship is there, which you can comment on. And that's so. All others are having positive, the significant ones are having a positive relationship. So in this case, we have two recommendations. What are the recommendations? One, increase the size, expand the company's operation. Expand the company in terms of asset base. That's what C size means there, company size. So how do I know all these? C size can work again. C size is company size. So usually we will be given two tables, the operationalized table, how these variables were measured, and then the revision table. If not, you don't know. So C size is the company size. So it's the total assets that you have taken off the company. You have to do what? Expand, increase the company's size. So you will reduce the risk management practice. That's one recommendation. What's the second recommendation? What's the second recommendation? Again, see what's the negative, the next negative and significant predictor. CFO, what's CFO? Not Chief Financial Officer, unfortunately. CFO here is what? Cash flow from operation. So to reduce earnings management, increase the operating cash flow. If you have more cash flows, you don't need to manage earnings. If you have lack of cash flows, then that's the problem. So increase operating cash. So these are the two recommendations that you could do. Is it? So take what are significant and see whether it's positive or negative. And based on the recommendation that you are going to give, it is a good thing like purchasing intention, then take the positive ones. Tell us. The early example that we took is what? Positive ones. Why? Because it was something to do with increasing the purchasing. It's reducing what? Earnings management. Earnings manipulation is not a good thing. You have to reduce that. So that's all. So the final question is that briefly explain what recommendations that research could suggest in order to decrease earnings management based on results obtained in the OLS pool regression analysis. Those you can see here. I have highlighted them. These are the significant predictors that has a negative correlation.
Your duality also can be taken.
Only what I got, of course. Another one is very good. Okay, that case. Excellent. CEO chat, good. What does it mean? Corporate governance have to take under digital business strategy. What's the duality? That also has a negative impact. What's duality? Where the same person holds both positions. Who is the CEO as well as the chair. Is it good? Yeah, that's what it says. If the same person holds those two, then differentiate. That's another recommendation that you put. So yes, that's also significant at 10%. That's why there's financial. You can indicate that as a good. You noted it. So you can have 3 recommendations. 1, increase the expand the size. Number 2, increase the cash flows from operations. Number 3, differentiate between CEO and chair roles. So we'll have less earnings money. Those are the recommendations. Expect these kind of questions at the exam. Any questions? Avoid viewers. I'll give you a lot of input, and of course, the best thing in this class is what? The recording is there. Officially recorded. Go through this. Particularly the paper discussion. Okay, so that's about regression analysis. So we did the theory part as well as we applied our knowledge into a question that was tested at the exam. But let me see whether you can take another question. Okay, there's a nice question. Let's see. Okay. In this question, we are again given table 1, 2, 3 and figure 1 below indicates the information extracted from a research conducted titled Effect of Corporate Governance on CSR Disclosure, Empirical Evidence from Listed Banks, Insurance, Finance in Sri Lanka by Bandaranaike and others. So definition of the variables are given. Total CSR disclosure, that's the dependent variable, and you have some of the independent variables. Both characteristics are here. Those are the independent variables. Duality, independency, board size, size of the audit committee, independence of the audit committee, gender diversity, board meeting, CSR likewise, and also you have some control variables, those are additional variables. And you can see the conceptual diagram. Right? Can you see the conceptual diagram? So what are these independent variables? What are these variables? Corporate governance variables are what here? independent. Then you have the dependent variable, what that? Level of CSR disclosure. You say when with the better governance leads to better corporate CSR disclosure. Then you have some control variables as well. Okay. And it says, okay, descriptive statistics has been given for the CSR disclosures. Now, when it comes to CSR disclosure, labor practices disclosure is there, human rights disclosures are there, societal disclosures are there, product or service related disclosures are there, likewise. So if I ask you now, they've been measured again using what? The disclosure levels. It has been now based on these companies, they have taken 174 companies, 174. If I ask this question, based on the mean values, what disclosure had been the most popular disclosure among these 174 companies? What disclosures? Because why? It has the highest mean. From 0 to 1, 0 to 100 scale, they have measured these disclosures in 174. So on average, 52.1% is what? Labor related disclosure. What's the most poorest disclosure? For the disclosure, other
Human rights.
human rights. So those kind of insights you should be able to notice. But now let's come to the interesting one. The regression analysis. Here you can see it's a simple regression table. It's not complicated. You have the coefficient and the t-test, and also now the asterisks are given under the coefficients itself with the t. That's perfect. There's no problem. So what does two asterisks represent? Again, you can see the same scheme is given. If it is less than 10%, it's one what? One star or one asterisk. If it is less than 5%, it's two asterisks. Less than 3%, less than 1%, in fact, is three asterisks. Okay. Now B stands what? Both sides. All the independence, both independence. If you don't know, you can go and see the table. B is the both sides. Yeah, B is both sides. Okay. Now tell me, differentiate between regression and correlation analysis. Why do you do regression analysis and why do you do correlation analysis? Correlation analysis looks at what? The relationship between two variables. In a regression analysis, what I told you about the prediction. You are going to predict these independent variables and how the dependent variable would behave. Correlation, keep in mind the other thing. Correlation looks at the relationship or the association between two variables. Correlation could only check the association between two variables. Regression could check the prediction of several variables or a dependent variable. The next question. Indicate four hypotheses that can the researchers could develop. How to develop hypothesis? And always look at one. This model. Can you tell me four hypotheses? Not four, you can tell how many. You can tell 11 hypotheses. What are the 11 hypotheses? The role of C or duality as association with the level of disclosure of the CSR disclosure. Then board independency as an association with what? CSR disclosure. Then both sides as an association with the CSR disclosure. So that's called hypothesis. H1, H2, H3, H4, H5, like comment on the CSR disclosure level. Already commented. And you see the mean values, you can tell the disclosure level. You can see in this table it's given. Now, of course, now these are sub indices and these are the total index. Are you happy about the total index? Now, these are the subs. Above the sub indices are given. So overall, the total index indicates what? The company's overall average disclosed only how much? 38%. Right, from 0 to 100 scale, they have presented only 38%. Are you happy? Not at all. In fact, if they really had disclosed everything, it would have been 100. But these are real statistics. These are disclosures in Sri Lanka. It's only 38% at this time. When the study was done in 2017, I think. Still, we don't have that kind of difference in that. Then on the other hand, then you can comment on the highest disclosed CSR sub-index. That's what? Labor practices. And the lowest is human rights disclosure. Likewise, you could comment on that. That was the interesting one. Briefly explain what do you mean R squared value of 0.590 referring table 3. What's that? R squared is what? What's R squared? The explanatory power of the selected 11 independent variables over the dependent variable. The both characteristics and the control variables, all 11, would explain only 59% of the CSR disclosure of the listed companies. So that's the answer there. Comment on the overall model validity. Is the model valid? Is the overall model valid? Yes or no? Yes. Exactly. Very good. The sig of F value is very much clearly indicated. It's 0.000. So it is significant. The model is significant. Absolutely good. Very good. You get the correct answer. Right. Then briefly explain what recommendations you could make based on this to improve CSR disclosure. What are the recommendations you could make? Improve, right? What to do? What to do? So first of all, we have to understand what's this CSR form, right? That we have to increase. The next one, FS. What's FS? We see what's FS. It has to be increased. Then what else? ROA has to be increased. Because all are having a positive impact as well as significant. So let's go and see what CSR form means. That you should have a CSR committee. If you have a CSR committee, that means the disclosure level is having a positive impact. So CSR form is there. Let's go and see. Wait. W variable indicating 1 if there is a CSR committee, 0 is not. That means what? Having a CSR committee is having a positive impact on the CSR disclosure. Apparently. For the next one, that was firm size, it's FS. Firm size. So larger the firm, better the disclosure. So expand your firms. Get more resources, then you can disclose more information. Then also, what was the next one? Was ROA. Increase the profitability, then you can disclose more. If you have more resources, you can disclose more information. Those are the answers for this question. Is this question difficult? Once you understand the pattern, now I discussed 2 questions. You got a brush there. something. Anyone face a difficulty, right? So please revise this. Okay. So now let me come to test of differences. So up to now I discussed these things with you. What is SPSS? How to create a data set in SPSS? Then how to create variables in SPSS, right? All things I discussed. Not only withstanding with that, then I discussed with you what? Descriptive analysis, then correlation analysis, and regression analysis. Now go and look at your research papers that you have chosen as your key articles. These are the tests that they have used. Right? In addition, there is another type of test called t-test. And one way and one. With that, we can complete the discussion on SPSS. Right? We need to discuss that as well, which I will be starting from now. So what do we mean by t-test in one way and one? We call that test of difference. So please take the test of difference. I have given this information to you in the regression analysis. Identity reliability also I discussed with you. These are going to be extremely important when it comes to the exam. Right. For anything, give you an understanding about this t-test and one way. Right. I have discussed reliability and validity, then descriptive statistics, correlation, and regression. What remains is the t-test and one way. We'll discuss the test very quickly. Okay. So what are these t-test and one way? I think I have to give a small note on that. What are the t-test and one way? It will take about half an hour, 1 hour based on your comprehension. So let's do that. Okay. Nice. So you can take down test of difference. So you can have test of differences two guys. You can take them, right? Comparing two groups. You want to compare two groups for the test that you have to do. You can be comparing more than two. Comparing more than two. So to compare two groups, these are called key tests. Key tests. Unfortunately, there is no coffee test, but there are tea tests. The coffee got given up there. When if you are going to compare more than two groups, you perform something called one-way ANOVA. One-way ANOVA and ANOVA stands for variance. T-test, there are three kinds. on sample t-test. Then independent sample t-test. Then you also have paired sample. So this is the whole thing that related test of difference that you should know. But on the other hand, we are not going to discuss all. If you really have to. We have to discuss the most important ones. Because it's the whole spectrum of t-test and one way. But I'm going to discuss with you the most important. What are those? So I'll be discussing this one, probably the independent sample t-test. Then I'll be discussing one way and which are simple tests. Which are a very simple test, but you have to understand something with the results test. Let's see. What are these tests doing? These tests, what these tests do this is, these are called test of difference. So test of differences means you are going to see whether two groups are different based on a certain characteristic by each other. Right? Now I would like to see now if I'm going to apply that to this class. Let's say we have say one female. Of course, we have many females in this class, of course, but we have got here one female and the others are outlined. At least they are supposed to be outlined. And then we have males too, right? In this class, we have males and females. So I want to see whether males and females are different in terms of result measurable marks. At the exam, I'm going to give you a paper, which I showed you. A similar paper will come at the exam. And let's say I want to see the average marks of females, whether it's different from males. Taking a certain characteristic, I'm going to say whether two groups are different from each other. That's what I do under what? T-test. You compare two groups. Independent groups. Males and females. Can there someone be common membership? Having common membership? The same time being a male and a female? No. So those are two independent groups. Is it? Two independent groups. Likewise, you are going to take two groups and you are going to see whether they are different from each other based on a certain character, like marks or some other character. Right now, the example that we have taken. In our example that we have taken, here I have taken what? Purchase intention. We have also considered their gender aspect. So we can check whether gender-wise is there a difference. Whether males prefer the music cap than females or vice versa. Okay, for what? An independent sample data. Or what you can do is, you can take more than two groups. There are situations where there are more than two. Now, what relation? Are there only two religions in this? There are four mainstream religions. At least four mainstream religions. There are several variants indeed. So if you have more than two groups, you have to use what analysis? One way, because you have to compare more than two. Right? That's enough of theory. Now application, practice, and we'll try to interpret the results. Let's go to our data set. Let's now go to our data set. And before we go to the data set, you can go to our questionnaire if you want, and you can see that we have got gender. Gender, how many groups do we have? Then marital status, how many groups do we have? Two. Married, unmarried? No. We have how much? Five. Now shall we see
Whether based on male and female, are they different from the purchase intention of the musical? Shall we see that? No one knows that, right? Whether males prefer or females prefer more than the other part. So that's what we do, t-test. Before we do a t-test, there are 4 steps in doing a t-test. Write down steps down. Write down performing an independent sample t-test. Please take down. Performing, 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 performing an independent sample t-test. Performing an independent sample t-test using SPS. Using SPS. Using SPS. Step 1. Step 1. Step 1. Step 1. Establish the null hypothesis. Establish the null hypothesis. Establish the null hypothesis. What's a null hypothesis? Null means what? Null and void. No. You say that there's no difference. Our scientist, first, before testing something, we'll have to have a assumption. So likewise, as a good scientist, now you have to come up with an assumption. The assumption usually is a null hypothesis. You will say that there's no difference. There's no difference between males and females in terms of the purchase intention of the music. So you write H naught. You say H naught. Let me show you how to write that. H naught. You will say this is step 1, right? Step 1. Step 1. What step 1? Establish the null hypothesis. Null means no. No difference. So what's the null hypothesis? You can say H0. A hypothesis written is in this way H0 because it's null hypothesis. What's the what? You will say there is no difference between males and females in terms of purchase intention of the premium version of the music act. This step 1. There's no right null hypothesis between males and females. Between why? Because there are 2 groups. More than 2 groups is among. So then step 2. Step 2. Step 2. Establish the decision criteria. Yeah. Establish the decision criteria. What's the decision criteria? Very simple decision criteria. Remember this? once and for all, forever. Right? What's that? If sig value, which is known also as p value, if the sig value or the p value is less than 0.05, do what? Remember this very well. Reject the null hash. Reject. Reject the null hash. Right? If let's say if it is more than 0.05, you cannot reject null hash. You cannot reject that there is no difference. That means there is no difference. You reject the null hash, this means what? There is a difference. In other words, reject the null hash is not what? There is a difference. You will reject. There is a difference. To reject the null. That means there is a difference. Step number 3. Of the interesting. Using SPSS, perform the independent sample and estimate the sequence for the period. This step number 3. So how many steps we discussed up to now? 3 steps. What are the 3 steps? Can look at the notes and tell me. First, establish the null hypothesis. Meaning that you will first assume your hypothesis means what is an assumption that there is no difference between males and females in terms of purchasing intention of this music act. People might think males might be preferring the music act than females. We don't. So you have null hypothesis. Good scientists will have keep it no difference. Be biased. Then step number 2, establish the decision criteria. What's the decision criteria? If the sig value or the p value is less than 0.05, you what? You take the null hypothesis. Right. Then step number 3. Now we are counting almost there is only one step more. Step number 3 is what? Using SPSS, perform an independent sample T test. Shall we do it together? Yes. So let's come now to this machine. So this machine does not have SPSS itself. Never mind. So let's independent sample. First of all, go to the SPSS dataset that we opened on transparent. Now here, this is purchase intention, isn't it? PI is the purchase intention. You can see it. PI is the purchase intention. Right. We need to see whether the purchase intention is different based on the gender. So do you have a gender variable? Yes, indeed. We have a gender variable. Here you can see the top gender 0, male 1, female. There is no order, and we have taken this classes. Now let's see how to perform an independent sample test. Now take down the steps under this step. Step down step. How to do that is very simple, of course. And remember, gender is quoted as what? 0 and 1, right? Keep that in mind. Okay, you go to analyze.
Okay, analyze. What could each other analyze? Compare means and go to independent sample t-test. Analyze, compare means, go to independent samples t-test. Analyze, compare means, because you are comparing the mean of what? Female's purchase intention with the male's purchase intention. That's why it's compare means. Then go to independent sample. Why independent sample t-test? Because these are two independent groups. Males and females, there's no common membership, as I believe. Independent sample t-test. And then the test variable is purchase intention. So once this dialog box comes, go to purchase intention. You can see here, purchase intention is there. Go to the most bottom and then you can see purchase intention. Then it asks what's the grouping variable? What's the grouping variable? Gender. Gender is there. You can take gender. Gender is there. Put it over here. Then you ask how gender is coded. How gender was coded here? 0 and 1. So therefore, define groups. So once you put gender, it asks 2 question marks are there. So tell define groups 0 and 1. And you can press cut. So it knows who are the 2 groups. Or what are the 2 groups? 0 and 1. That's it. That's all. Then comes the independent sample t-test results that we may expect. You can see here, there are 112 males who responded to this survey, and their average purchase intention is 3.4. Right? Can you see it? 3.4. Can you see the group statistics table? The first table over here. So the online participants is over here. Right? 3.4. For females, there are 263 females who participated in this survey, and you can see their purchase intention is 3.5. Right? Is there a difference between males and females in terms of their purchase intention? Very slight difference is there. It's 0.01 difference. Right? But the problem is, there is a difference indeed, but is it statistically significant? That's the issue. By looking at like this, we cannot tell that. For that, we need to perform what? An independent sample t. So in the next table, you can see the second table that's produced here. The independent sample t test result is given. You can see here, you can see over here. Look at the cursor, online participants, right? As well as the good participants over here, you can see there. You can see here. The sig value 2 tail is how much? The sig value 2 tail is how much? The p value is how much? 0.258. Now that's what you wanted to estimate under step number 3. So we shall take it down 0.258. So now go back to where you have taken down the steps. And what's the sig value? 0.258. Right? This is the estimated p value or the sig value calculated by this case. It's not the answer, but it will help you to get the answer. Now the question is, I would ask a very simple question from my good accounting student. What? 0.258, is it below 0.05 or above 0.05? Well above 0.05. Now let's go to our steps. What was our decision criteria? Establish null hypothesis. Null hypothesis indicated there's no difference. Then, what was the decision criteria? If less than 0.05,
Do what? Reject the null. Right? Reject the null. That's what we were discussing. Now, can you reject the null? What's the sig value? 0.258, which is well above 0.05. Can you reject the null hypothesis? You can't. That means what? You cannot reject the null hypothesis. That means there is no difference between males and females in terms of their purchase intention of this music. So that's step number 4. That's the conclusion. So you can say step 4. Conclusion. Conclusion. You could write since the p value 0.08, right, is above the threshold, the limit, right? 0.05. Right. Since the p value 0.258 is above the threshold 0.05, we cannot reject the null hypothesis. We cannot reject. This means we cannot. This means that there is no statistically significant difference between males and females in terms of using in terms of the purchase intention. Purchase intention of the premium version the music. There is no significant difference. So males and females are not different in terms of the purchasing intention, right? So how many steps are there? 4 steps. Again, let me revise the 4 steps. Step number 1, establish the null hypothesis. What's the null hypothesis? It says that no difference between males and females in terms of the purchase intention of the premium version of the music. Next, step number 2, establish the decision criteria. What's the decision criteria? If the p value of the signal is less than 0.05, reject the null hypothesis. That's it. Reject means what? There is it. No difference there. Reject करना करेंगे. Difference है. Right. Then step number 3. What's step number 3? Using XPSS, calculate or estimate the sig value of the p value. P equals what? 0.258. So, step number 4, conclusion. What's your conclusion? Since the calculated sig value 0.258 is well above 0.05, you cannot reject the null hypothesis, which means that there is no significant difference between males and females in terms of what? The purchase intention of the music premium. Understood? Same thing for on pay and off. Again, how many steps are there? 4 steps. The only difference is that you have more than 2 groups. Shall we apply it? Right. Now, tell me situation where there are 4 groups. Marital status, are there more than 2 groups? Income, yes, there are more than 4 groups. Shall we apply that basic? Now you might see, you might think unmarried people might be more towards what? Listening to music. And they might have more purchase intention to purchase this music app. Because always they are listening, married people are listening what? Music. Oh, this is all the music. No. Good music. Just joking. No music. Okay. Now let's see. Now let's see this situation. Marital status, how many groups are there? 5 groups are there. Right, again, you can apply the 4, again the same 4, what? Steps. Step number 1, what's it? Establish the null hypothesis. Now, in terms of marital status, what's the null hypothesis? And purchase intention? You'd say what? H0. What's H0? H0, you say there is no difference among, because you cannot say between 2 groups. No? In English, it says if you are going to compare more than 2 groups, it's among. There is no difference among the marital groups. But the purchase intention of the premium version of the music app. Again, say there is no difference among the groups. Right? Marital groups. There are 5 groups, it seems. Married with children, married without children, single like a single. Okay. So no difference. Then step 2. What's step 2? Establish the decision criteria. What's the decision criteria? If the sig value or the p value is less than 0.05, do what? Reject the null. Reject the null. Then step number 3. What's step number 3? Using SPSS, estimate the sig value or the p value using now one-way analysis, not the independent sample test, but the one-way analysis, because you have more than 2 groups. Shall we do that? Okay. So maybe you can take down the 3 steps up to now. Right? You can say step number 1. Step number 1. I would say one-way ANOVA, right? Performing one-way ANOVA analysis using SPS. Put a small topic. Performing a one-way ANOVA analysis using SPS. So let's say marital groups and purchase intention. Just take down marital groups versus purchase intention for marital groups and purchase intention. It's going to be very easy. So step number 1. Establish the null hypothesis. What's the null hypothesis? There's no difference between the marital groups. Whiteboard है उसका सबसे बड़े I said marital. In terms of purchase intention of the right, not between it should be amount. So this is your step number 1. Establish the null. In terms of marital groups, there's no difference on the purchasing.
So establish decision criteria. Same decision criteria. What's the decision criteria? If the sig value is less than 0.05, reject the null type. That's it. Then, step number 3. Using SPSS, perform the independent, not the independent sample. It is what you are doing, one way and one way, the good dash at right? One way, ANOVA. But anyway, you know, ANOVA is an abbreviation. ANOVA stands for analysis of variance. Or analysis of variance killing by ANOVA killing. That's an abbreviation. Analysis of variance. ANOVA. Analysis variance. Analysis of variance. ANOVA. Then, next one. Now using SPSS, shall we do that? Yes, we will do it. And we write the construction. So what's the ANOVA value? Sig value. So how to do the test? It's like this. You go to again SPSS. Go to SPSS dataset. SPSS dataset. Then go to analyze. Compare means. Then one way. Write down the step. Analyze. Compare means one way and another. Analyze, compare means one way and another. Then you will have the dependent list is the test variable. What's that? Purchase intention. Purchase intention. So why don't you use the purchase intention? You can say purchase intention over here. Purchase intention here. Why cannot do that? And the factor is what? Factor is what? Marital status. First marital status. You are married to. So what are the other states? Marital status. But don't press OK. I'm OK press karane ba. You go to options. There are options here again. Can you see the options? Go to options. Please take descriptives. Please take descriptives. And now press continue. Now press continue. And then press OK. Then press OK. Now you can 6 people responding. The average intention is 3.55. Out of a 5-point Likert scale, they have indicated 3.55. Better. Married with children. Married without children, 3.6. Single parent, 3.6. Single, 3.4. Right. So I think there's a difference. Difference is zero. So then to check that, you can see the ANOVA table. The culling ANOVA table is with an ornate. We checked on the regression analysis ANOVA table for what? To see the overall model. But here we are looking at now this sequence is how much? 0.132. Right?
0.132. So now you can go and write that 0.132. It's 0.132. Now my question is 0.132 above 0.04 or below 0.8? It's above. So can you reject the null hypothesis? You can't. To reject the null hypothesis, if it is what? Less than 0.0. Here it's more than 0.0. So can you reject the null hypothesis? Meaning what? Yes, not. So again, we'll go to step number 4. Conclusion. Since the p-value 0.138 0.18 is above the threshold 0.05, we cannot reject. We cannot reject the null hypothesis. This means that there is no statistically significant difference among the matrix. Among the marital groups. In terms of the purchase intention of the premium version of the music app, there's no significance. So this is how you consider. Okay. But before we leave, shall I show you an example on this and we'll go home. It will take 5 minutes. And after that, let's leave home. And I know some people are there, they have to pay first. It's there, isn't it? So we'll quickly look at a question on t-test and one-way test of differences and go home and take this question. I know it will be too much if not. Right. Okay, how to do that? Let's go and see an exam question. Maybe. With this we'll go home. It will take 5 or 10 minutes and with that we'll finish. Other highway coming only. Okay. Now look at this question. Interesting question, right? The following extracts are of a research study on the perception of corporate internet reporting of accountants of small and medium scale enterprise. So what they think about corporate internet reporting. It's a real study done by one of my students. Their perceptions were measured using a Likert scale between 1 to 5, very negative to very positive perception on corporate internet reporting. You can report the digital business strategy. I always promote what? Report on the internet. And also, we are expecting Srilanka SAB. Okay, so you can see based on the accountant's qualification, who is having only O level, there are 93 people, their mean value is only 1.92. That's not good at all, isn't it? The 1 to 5 Likert scale, 1.92 is not good, isn't it? They have a quite negative perception related to corporate internet reporting. Then GCA level, it has come up to 2.62. That's good. Then first degree, who is having first degree like you will be very soon getting that. That's 3.42. Then MBA 4.01. Then PhD 4.78. So what has happened? When their qualification level goes up, what has happened? Their intention or their likeliness for corporate internet reporting has gone up. So what can you do? Yes, you can see that when education goes up, more modern technology adoption is being proposed. Okay. Then the ANOVA table gives, of course, what?
the attitude towards that corporate indirect reporting. Okay. So the first question. If the null hypothesis related to the analysis performed under one-way analysis. What's the null hypothesis? There is no difference based on the educational groups in terms of what? Their likeliness or their preference to operate indirect reporting. Right? Based on their education level, there is no difference. That's your null. Then explain, taken as a whole, whether the accountant's perception of the reporting would differ. Would it differ? What does the significant value say? What does the significant value say? Because why? Here you can see it's 0.0, which is less than 0.05. So what's the word question? Based on the education levels, they are what? The preference towards or their intention towards engaging corporate indirect reporting or their preference towards corporate indirect reporting, it differs. Then finally, now if you have to provide a recommendation to Srilanka, who is promoting this kind of activities like corporate indirect reporting as well as other kind of forms of corporate reporting, so what's your recommendation? Educate people. Education. So this shows that when education goes up, their likelihood or their preference towards corporate indirect reporting goes up. So educate these. Not to don't give a recommendation and make all the chartered accountants and all the SME holders, accountants, what? PhD holders. Which is not going to happen easily. But you want to say is that you have to promote education. You have to promote corporate indirect reporting among these people. The other hand, what you have to do? DBS. You have to introduce digital business strategy. Which is our subject which we will be discussing. Very soon I will be taking a past paper and I will again explaining this stuff. Which I thought I didn't want to take it today because we don't have time. And also as a flow, we discussed all that are relevant to SPS. Now this is the scope of SPSS and quantitative data analysis. With this, it's over. And what remains is I need to discuss about qualitative data analysis or qualitative kind of research, like approaches, and finally the paper discussion on that. So overall, I have already discussed 50% of the paper by taking 2 past papers. And don't worry, right? Go through those questions that I discussed again, and again. I know you are students who are working and who are not typical undergraduates who have a lot of burden on your shoulders. I do understand. So let me make your lives a little bit easy by considering the questions that I showed. Not the same one, but similar way. So in that way, we'll finish today. So please go through this. And the deadline for the proposal is extended till that. Yes. We have one deadline. What's that? That is? Individual. Of course, good luck. Good luck. So you want an extension for that? We have to ask, but okay, no worries. My good students, when a request is made by my good students, so I'll extend till Monday midnight. Let me do it now itself. So Monday midnight, other things that data are here. You use one of. Okay, since there's a request, right? Innocent request, right? Indeed, that son asked it in way of go very humble way. Of course, fine. So till Monday midnight, I'll be giving. So you have tomorrow and Monday whole day you have. Okay, good luck.